Hello, everybody. Welcome back to a very special episode of the Loan Officer Wealth Podcast. We are here with Matt Oliver. Matt, welcome to the show.
Thank you. Yeah, thanks for having me. I'm honored to be here.
Fantastic. Well, we are honored as well. I know you're a very humble guy, but I have to state for our listeners that you are currently number 7 in the Scotsman's Guide top 100 loan officers in the country. So congratulations on that. And again, thank you for being so generous with your time.
Yes. Thank you very much.
So before we get into how you're growing the business, marketing, advertising, all those wonderful things, could you tell us a little bit about your structure? Where do you get the majority of your business from now, and how's the business set up?
Yeah. So we're actually set up a lot different than I think most companies are. We've advertised on talk radio, specifically talk radio, since 2001. My father-in-law actually started the company in 1999. He got on talk radio in '01. My wife, obviously, she wasn't my wife at the time, but she's worked here with her father. She worked here with her father from probably 2000 on. I started here in October of 2007, so right in the thick of things, right when things were getting ugly. That was my experience of moving into like the first mortgage area. Previous to that, I was in worked for Chase doing home equity lines of credits in a call center with Chase. And so obviously when her and I met in '05, I told her what I did. She said what she did. The funny thing is when we first met, I actually said to her, like, why would anyone go to a mortgage broker? Why wouldn't they just go directly to a bank? Because I had worked at Chase Bank out here in the United States. And I just thought it was odd at that time. I was 25 years old. I thought it was odd that people would go to a broker and not go directly to a big retail bank. Obviously being that I worked there too. So like I said, started there in October of '07. Things got real ugly, got in at about the worst time you could get into the mortgage business on the broker side or first mortgage side at that point, and then started from there. So Lisa, my wife, actually took over the company in June of 2009. So when I got on in '07, her dad was already on a couple radio stations. One was a sports talk, and then the other one was political talk radio. When things got ugly, we went off the political talk radio side because we could only afford. I mean, when I got ugly, fine, with the '08 and '09 collapse, we had to cut one station. We were trying to cut costs as much as possible. And the sports radio one, we had been on since 2001. Actually, when the Diamondbacks played the Yankees in the World Series. Okay. So yeah, because we had been on there the longest, we kept that one and cut the other one off. For a short time. We did end up picking that station back up in like 2010, I think, right around there. And then just after Lisa took over, we just started adding more and more stations. I think we're on about 6 right now.
Wow.
6 total stations. We were like, when things were good in 2020 and 2021, we were on like 8 or 9, but it was more in that position. It's more about kind of branding, developing the brand a lot more. I mean, we were on same radio station, just different talent people were on the air during that time. So I mean, it's kind of like we were flooding the market, but it was almost like branding the market because we've been on there so long. Some of these stations we could probably go off and still carry a decent amount of business for the next year or two. From that point, we just at that point with money being kind of flowing real easily in 2021. It was either, develop the brand a lot more or pay taxes. So.
Right on. Okay. So is the majority of your inbound business strictly from the radio?
Not, I don't have an exact number, but I would say about half now, maybe 40 to 60%, depending on the time. So let's just call it half now is probably from radio on a monthly basis. The other half would be through relationships that we have developed over time out here and repeat clients from past radio calls. So, I mean, you could say that the radio pretty much generates a very large percentage of that, but new business would be probably directly from the radio. Like if they heard us this past 6 months or something and decided to pick up the phone and call.
Awesome. That is incredible. So What I'd like to do is kind of go in a big circle, and we'll talk about consumer direct first. Let's dive into the radio portion, how we're driving the calls, what that looks like, so that other loan officers can take a look at that model. But then I like to look at, okay, you bring those people in, you get them pre-qualified. How are you turning those into referral relationships? And then talk about database marketing, because that's really the three ways to grow a mortgage business. So radio advertising has changed a lot from 2001 when the business first started doing it to today. So if you were to have a brand new loan officer come into your office and say, hey, look, I'm looking to brand on the radio underneath your brand in your branch, what would be the first steps that they would need to take in order to take a look at radio advertising? What's the format of the show? What do you think is best from everything that you've learned over the years?
Well, so it would more be like advice for someone that's probably going to do it on their own company, because on ours, with the name out there so much, it's real synonymous. So, but to answer your question, I think was where you're going anyways, is we recommend in Arizona, just it's talk radio, no music radio, because if you got a crappy song that comes on, they change the station, but if it's the way that they do the advertising out here, it'd be like you and I kind of going back and forth like we are right now, talking sports or whatever. And then they go right into, like, hey, let me tell you about my good friends at the Lund Mortgage Team, and then they start going, and people aren't changing the radio station at that point because it's talk radio. I mean, you're used to it, but they segue from you and I having a conversation or the talent on the station at that point, just right into the ad usually. So people they're not changing the station. The other big thing that we do out here is the talent endorses the company. The specific talent or DJ, whatever you want to call them on the radio, they endorse the company. And it's kind of goofy because the people that are listening to the radio or the talk radio love the talent. They look at them as a celebrity. So, I mean, I've had some that call me and say, man, they really talk good about you on that radio station. It's like, well, no kidding. I'm paying them too. So some people don't. So I think at some point they probably understand how it works. But we have a sports talk guy that's real East Coast, New York, real brash, and now he's definitely cocky. But he has people either love him or hate him. But I'll get people that still call and say, I hate the guy, but I trust the guy. Because they've listened to him for 20 years. So the point is that by him endorsing us and him putting his name or stamp of approval on it, they want to deal with us because they trust who he is as the talent or the DJ at that time.
That is amazing. So do you write the advertisements for them and they're right, or do they know that it's an endorsement and then they have somebody on the radio that kind of writes the ad for you?
So when they go right into it, because so to circle back, I didn't answer this, I'm sorry, but we do a 60-second live read on the radio every day that they're on the radio. So, I mean, obviously they take vacation and whatnot, but whenever they're on the radio, they do a 60-second live read. And then there's a couple pre-recordeds that will play throughout the day, pre-recorded ads, which are, kind of the same regurgitated ad. Those ones are a little bit more scripted. The recorded ones would be. The live ones, I really just want, I give them some bullet points and I want them to kind of free flow it and say whatever they want to, or, within reason. I mean, they're not going off topic, whatever, but we do give some bullet points in that, but we don't give a script. We want it to be authentic and sound like it's coming directly from him, which it is. So that's how the live reads work. So we do meet, we'll meet with them once a quarter, and obviously when the going was good, you could have different topics that you could kind of talk about. But right now it's like with refis dried up quite a bit and really only purchases there's not a whole lot of exciting things for them to talk about.
Yeah.
Especially with rates being so high, it's like not a lot of people are tuning into what's going on in the mortgage industry currently.
Yeah.
But that's how the general synopsis of it works on the radio side. But the one thing that I would advise, I would say, do talk radio only for the most part. Pick an endorser if they have that availability. And then the other thing is that this is the most important one, is you have to be ready to spend money for, at least 12 months, And it's expensive. It's definitely very expensive, but you can't really prepare to throw this investment out there and start turning deals in 3 months, 4 months. It's probably not going to happen. So if you don't stay on it, you don't stay consistent, it will not work. There's no way it'll work. So it's definitely a big investment that you got to be ready to throw, throw the money up in the air and see if it sticks. And it will. It's just it's staying consistent and staying and doing it, over at least 12 months, if not 2 years. After that, then it gets rolling. But up front, I would almost say the endorsement part of it is not maybe as important right up front, like the first year. It's more like flooding the radio station with your brand.
Huh. Interesting. That is so. I'm glad you said that, because I think so many people look at things in a 30, 60-day window, and it's the mortgage
Yeah.
industry. I mean, you've got to, not only do you need to build the brand, get your foot underneath you, get enough leads, but then you got to mature the leads, get the apps, close the deals. Like, it's a long cycle for any marketing, and I'm sure radio is longer than that. So Matt, can you give me a rough idea of what a loan officer would be looking at for like one talk radio show in their local marketplace? Like, how much per month would you see as an investment?
I don't know on the flooding, because I think if I went back or if I started over, I would probably do a year's worth of just flooding the radio and try to mix in a little bit of endorsement part, because the one thing is, obviously this is such a huge transaction. You want the consumer has to trust you. Just from the radio ads, they have to be able to feel that trust, and or when they talk to you on the phone, trust you. So that's where the timing, where it takes a little bit more time to get to that point. It's definitely six figures annually. So let's call it 8,333 a month.
Yep.
That can be plus or minus. I mean, sometimes we are quite a bit over that if there's a station that has a lot more listeners. That's the one thing with sports talk. The demographics are wide. You got 20-year-olds to 70-year-olds on sports talk. You do have women that will listen to sports talk. It's not a lot of them, but the political side of it, I'll just say it in out here, it's the conservative talk radio is the key on that, because with conservative talk radio, you have better credit. they tend to have more equity, better borrowers from a financial standpoint. I mean, it is what it is. But that demographics is going to be a little bit older, because your 22, 25-year-olds they don't care about listening to politics at that time.
Yep.
So you're getting a lot. And then the other genre that we have is mainly like current events, what's going on in everyday. They do talk politics, they talk sports, they just talk all current events. That demographics is a lot younger, but you're going to get a lot more first-time home buyers from sports talk and from the current events. The political talk will be a lot more refis and second homes and move up and stuff like that. But I also find with the political talk, they will tell their kids, it may be a 55-year-old or 60-year-old that's listening to the show because it's politics, but he'll tell his 25 or 28-year-old son or daughter to call that company because he trusts them.
Yep. That makes total sense. And you mentioned calls there. How do you get the majority of the leads? Is the call to action go to your website? Is there a phone number that you've been just branding for all these years? What's primarily, how do you get the leads from radio?
So we don't really, we did discuss the phone stuff for years. We would say the phone number, and there was even some times where you could say like text Lund, Lund Mortgage, text Lund to 620-620. And then we would send them back some information, because most of the time they're driving, it's talk radio. They're listening on their way home or their way into work or whatnot. So we kind of went away from the phone number kind of stuff and just drove them to the website. We have a real good website right now through Lead Pops, is pretty big out here. Yeah. And that has the call to action on there a lot. The lead funnels that get generated through there. So one thing we don't ever do, we never discuss rates. Personally, the company doesn't ever discuss rates, because obviously everybody has a different one. And we don't want to get that brand of like a used car salesman type deal, where we're promising a certain rate and then someone calls in and they're like, why can't I get X rate? So we really just hone it in on we're local, we're family owned and operated. We're the people that we're at your kids' soccer games with you, because we have kids that are at soccer games. We kind of try to go a little bit more of that type of branding.
Yep. That makes total sense. Okay, so that is an incredible introduction and education on radio advertising. Matt, thank you for that. So let's talk a little bit about the referral aspect of the business. You get these people come in, they love the brand, they do business with you. What does it look like to generate either reviews from those people or referrals from those people as they come through? And what does the database marketing look like?
Yeah, so what we try to do on the purchase side, obviously when refis, we knew they were going to dry up at some point with rates had to go up. So we definitely grabbed every single one of those that we could over the past couple of years, and then we were shifting the radio advertising to go 95% purchase because that's where we're at. But we've just, and I really feel like if the whole community got together and did this, we could change the narrative. But I've been beating a dead horse by saying call anybody to get pre-qualified first. The first thing you should do is get pre-qualified. Do not go look at homes. Don't contact a realtor. Don't do any of that stuff. Your realtor is going to want you to get pre-qualified first. So get that part out of the way. But by doing it that way, they call into me. They don't have a realtor. I'm creating the partnerships that way.
Yeah.
And I wish that our whole community could gather up and do that in as a mass person anyways, or a mass call to action anyways. And then we wouldn't have to be going into everybody else's offices, if we just kind of educated the consumers a lot more and said, call in, get pre-qualified first, get that out of the way. That's the boring part. And then you can do the sexy part next, which is looking at homes. That's the fun part.
Yeah.
So that's how we kind of build up the network of partners with realtors. We really strive to find ones that are going to do what's best for the client, no matter what. I mean, they'll take lower commissions on deals. If I got somebody that calls in and they want to sell and buy, I'll call a realtor and say, hey, you're going to have to take a little bit less on this, but it's on a silver platter. Here's the deal. They're pre-qualified. Just make a little bit less on it because that was my sales pitch to get them to deal with you.
Right.
And we develop the partnerships that way. We much rather, we do like being a lot more direct to consumer. That's worked really well. But that's how we build up the partnerships on that side of it. As far as the database goes, we've been really strong on that since like 2012 of just retaining everybody that calls in. I mean, you're not going to be able to get a phone number and an email address from everybody that calls in, but we definitely try. And then keep those names in whatever database works for you. I mean, I know there's always these questions on what CRM is the best, and the answer is always the best one is which one works for you and your business.
That's right. I could not agree more. And it's funny because we're starting to see a shift in the marketplace. So a big thing that we do in our marketing agency is we figured out how to use artificial intelligence to rank mortgage lenders on the front page of Google. So if somebody goes to Google, types in mortgage lender, if they're within like a 50-mile radius of your office location, we can get it bigger than that, but they see you on the 3-pack of Google, which is the map placement that shows up at the top of Google. They read the reviews and they call in. And a lot of the feedback that we're getting is that borrowers are starting their research with the lender before they talk to a realtor. And one of the other things that we've been huge on is making calls to realtors. We have a service called Concierge. We'll actually call the realtors and set appointments up for loan officers. And I can tell you by far and away, the best thing that you can have in order to attract that top performing realtor, somebody that you actually want to do business with, is a pre-qualified buyer. So your ability to go direct to market, I think, is where a lot of loan officers are missing the boat. They're looking for what do I bring to a realtor to bring value to this relationship, and getting direct to consumer and getting that pre-qualified buyer ahead of the realtor is the solution to marketing in today's market.
Yeah, that's really worked real well. I mean, that's what we say on the radio. I mean, that's what we're trying to really harp on as much as we can. Obviously, we do a little bit of SEO stuff too, and Facebook. Obviously, everybody has to be on that. But that's our point. That's what we're trying to do the entire time, is drive that point home. We have kind of engaged in some of that. We're trying to set up an appointment, have a conversation with the realtor, and do that kind of stuff. We haven't yet found that worked real well, but I'm sure that there's a way to perfect it.
So I'll share something with you that will also be helpful for our listeners, I hope. But I have a client of mine who does a ton of radio in Texas, and he shifted his model to starting to interview realtors on his radio segment. So he's using that as his outreach piece to these larger realtors, where it's like, hey, people really want to know what's happening in the marketplace right now. I've got a 60-second segment. Would you like to come on and do a quick 60-second radio segment with me? So he's using the radio airtime that he has. The same thing. It's like refinances dried up. They were looking for content. He's like, hey, why don't I use this to showcase and highlight some of my realtor partners that I want to open these relationships up with and support existing partners. So he's turned it into kind of like a quick little back and forth, quick snippet of just like one question for the realtor, but it's enough to get that realtor attracted and in a relationship.
Yeah, it's almost like a co-branding type deal, right?
Yeah.
Yeah.
So there's that as well. Now, Matt, you've been so generous with your time and your knowledge. I can't thank you enough. I do have one final question for you. You've been in the industry starting, 2007, 2008, 2009, been through the most recent cycle and now in this cycle now. Do you see any familiarity between the last down cycle in 2007 to 2009 to now? What's your mindset right now? How are you approaching growth? Because this is cycles. We're going to come to the end of this cycle and be on the other end. How are you preparing for that? And what's your advice to other people in the mortgage industry right now?
What we've been really focusing on is just almost like getting ready to go to war. I mean, we know that that it's going to come back. We know that the rates are going to come back down. We may actually get people that you may refinance them twice again over the next 3 years again. So we've gotten all of our systems in place. That's what we've really been working hard against is getting our CRM all dialed in, keep the name out there, keep the brand out there, let people know that you're still open and doing business. But just having all of your technology pieces in place and ready to go when the time comes. I feel like we didn't do that. And we weren't good at that in 2008. Thankfully, the business didn't skyrocket right after things started getting better. But as I think back, HARP was a big refinance program that took off in about 2012 out here. But my point is like the market gradually got better in 9, 10, 11, and then when HARP, the Home Affordable Refinance Program, took off in 2012, we hit the ground running. Now we didn't have any systems in place or anything to be able to handle that amount of volume that was coming in. So that was a big wake up sign for this downward swing, is be ready when the tide shifts again, and it's going to go from there. But I think one other big thing, depending on when the loan officer may have gotten in the business, is pay attention to how this downward swing is and was, and especially from the financial standpoint. I mean, we saw people. I barely got in the business in 2008, but I saw people buying every kind of imaginable sports car you could imagine, and then they're out of business or filing bankruptcy or whatever. I did see a decent amount of that happening in the beginning of this cycle, and I think it's really slowed down, thankfully, and people are realizing this is a wild business. The mortgage industry, it has extremely high ups, but extremely lows rather. It's never going to be as good as it always. On the high end, it's never going to be that way forever. On the low end, it's never going to be that forever. You just got to try to manage the middle ground of it, especially financially speaking.
Yes, I could not agree more. That is why the podcast is called the Loan Officer Wealth Podcast. We're all about, stash that 40% right off the top and live on the rest and all those wonderful things. But those are for other episodes. But Matt, to hear it from somebody of your stature in the mortgage industry, I hope that our listeners really take that to heart and drive that home, because that's a recipe for success for the rest of life. So thank you for sharing that with us. And again, thank you so much for being on the show today. If people want to learn more about you or the brand or potentially reach out, how do people find out more about you?
Yeah, I mean, just reach out. My email is matto@lundmortgage.com. We're on the website is lundmortgage.com. I'm pretty much an open book with anybody and everybody. I enjoy chatting like this too. And I'm again honored and appreciative that you reached out, and thank you for having me on. I greatly appreciate it.
That is amazing. Well, to all of our listeners, this is definitely worth a 5-star review on iTunes. So make sure head on over to iTunes, leave us a 5-star rating and review. It helps us get more incredible guests just like Matt on the show. If you're on social, make sure that you like, comment, and share on this episode with the thing that you loved most. And don't forget to share this with other people in the mortgage industry, because a rising tide rises all boats in our industry. So again, thank you for listening, and we'll see you on the next episode.